Well, there's some good news on the state of the jobs market as SBS FINANCE editor Ricardo Goncalves joins us now. Ricardo, it's down to a 12-month low.
That's right, Anton. It was a better than expected result from the Bureau of Statistics, with the May unemployment rate falling from 6.1% to 6%. But it's unlikely to stay that low. The government knows the jobless rate was good.
We've had 111,000 new jobs since the beginning of this year. But there are still 745,000 Australians who are unemployed.
And there'll be more unemployed.
Today we have some concerning news from Alinta.
The energy giant will shut down its Port Augusta power station. 400 jobs will be lost and hundreds more will go, with Woolworths closing its Hume distribution centre in Melbourne's northern suburb of Broadmeadows. Westpac believes unemployment could rise to 6.5% this year.
The main reason is that the momentum in the economy has been slowing through this year. Employers, while they're sort of still employing, they're not really employing at a great rate.
That's because the jobs that are being created are predominantly part-time.
Given what we think with the labour market, and the labour market is not performing as robustly as it should be, trying to drive that unemployment rate down into a much greater level, I'd still highlight there's risk for rates to the downside.
A report from recruitment company Hayes revealed only 36% of the 2,600 organisations it surveyed expected to increase their permanent staff levels in the year ahead. But of those who do, 46% of employers expect to increase positions in the project management area, followed by IT, operational management, marketing, sales and human resources.
We're continuing to see a demand for skilled professionals who can help organisations cope with how technology's impacting their business.
The challenge is getting the experience needed, which these roles demand. Now, currency traders did like the report, though, with the Australian dollar surging about 0.5 cent on the news. But an even bigger move came on the New Zealand dollar cross. Now, remember a few months ago we were talking about how the Kiwi was close to reaching parity with the Australian dollar. Well, it's now a long way off, and that's because early this morning its central bank cut official interest rates for the first time in more than 4 years.
A reduction in the official cash rate is appropriate, given low inflationary pressures and the expected weakening in demand.
To the Australian share market now, which surged the most in 7 weeks thanks to today's jobs report and a better than expected read on China's economy. The banks led the charge, with all adding around 2%. The miners also did well today. Ramsay Healthcare surged 3.25% as it reaffirmed its upgraded profit guidance for the year. In Japan, the Nikkei rallied from its 3-week low thanks to a weaker yen. Shares on Wall Street made gains overnight. Right now, the Australian dollar is trading at about 77.5 US cents and is mostly stronger across the other major global currencies. And on the commodity markets, both gold and oil are up. And here's some final news if you're a renter, a bit of a reprieve. CoreLogic RP data says rents in Australia's capital cities are rising at their slowest pace on record. There were gains in Sydney and Hobart, but steep falls in Darwin and Perth, and the average capital city rent is $488.